Hey everyone, Jeff Dorman, Chief Investment Officer at ARCA, back again for another edition of That's Our Two Satoshis Live. For those who don't know, we write about the digital asset markets all the time. Really, for almost 5 years now, we've been writing about it. You can find the actual write-up at our blog, ar.ca/blog. Or you can just listen to what we chat about here. But before we get started here, reminder, this commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. Had to trim up the beard this week. We apparently last week I looked a little disheveled. The beard was out of sorts, maybe bags under my eyes. So maybe that was more reflective of what the market conditions were giving us. But I need to reassure everyone that I actually love this market. I mean, obviously sensitive to the losses and to the pain that people are going through. But I mean, this is interesting. There's a lot of really interesting things happening in this market, from dissecting digital currency groups' balance sheet, to looking at some of the bankruptcy dockets, to DAOs that are potentially liquidating and trading below book value. I mean, this is from a purely objective standpoint, from an investing standpoint, there's a lot of really interesting things going on right now. Not necessarily being reflected in the prices, though. I think if there was ever any debate about whether or not we've decoupled from the macro environment, I think it's pretty clear and certain that we have now. I've been making this case since May when Terra Luna happened, that digital assets have been separate from the rest of the world, but certainly now, right? I mean, you have the S&P and the Nasdaq up 16% from the lows as the market is starting to price in a slower shift in rate hike expectations. But obviously, digital assets being completely beaten down by not just FTX, but what's happening with Genesis and now Maple Finance and everywhere else. I mean, I think the real thing that we should be talking about is that look, there was two reasons why yield existed in digital assets, right? The first was because there was a shortage of working capital, right? People, market makers specifically, and other exchanges, some funds, needed to borrow assets in order to do their jobs, right? And as a result, if there's demand to borrow, there's a yield component to it. The second is incentives, right? Call them rewards, call them incentives, right? Basically, there was reasons that protocols and companies were paying some form of equity-like rewards in order to incentivize behavior. The latter hasn't gone away, right? Maybe there's a pause right now because everyone's shell-shocked, but there will always be reward and incentive-based yields. ApeCoin, for example, is starting their staking today. We haven't seen the published rates yet, but rates are going to be pretty high, right? They're trying to incentivize holders of ApeCoin as well as Bored Apes and Mutant Apes to stake, and as a result, though, there will be a yield component to that. But on the lending side, that may be gone for good, and truthfully, it may never have existed in the first place. One of the things we've been talking about for years really is just this idea that everybody wants to lend their Bitcoin, but nobody actually wants to borrow it, because there's nothing to do with it, right? You can't do anything with Bitcoin. At least with ETH, you can do something, right? You can borrow some ETH. You could, utilize it for gas. You can utilize it in some DeFi applications. But there's just no demand to borrow Bitcoin. And what we're finding is there really probably were only two major players in the market that were really borrowing on any sort of a frequent basis, and that was Three Arrows, purely for leverage, and Alameda, both for leverage and for market making. And with those two entities gone, there's just really no demand to borrow right now. And as a result, it's just the ripple effects are pouring through. One by one, from your BlockFis to your Celsiuses to Genesis, and now Maple Finance and those who are delegates on Maple. It's just a really hard business to be in right now when demand dries up to borrow. So we could continue to see some smaller entities struggle. But what's interesting is that there's actually a reason that the digital asset market has been flat to slightly higher over the last 3 weeks. And it's because with this lack of lending, it also means you can't short the market. There's just it's very hard to get a borrow right now to short. Binance has higher collateral requirements than FTX did. And you can still, if you're a non-US entity, you can still short using Binance futures or OKX or some other places. But in general, it's harder. It's harder to short right now, which means the only way this market goes down is if somebody who owns a physical token or coin decides to sell. And the natural question is, who in their right mind would be selling now, who hasn't sold already at some point over the last 6 months? I mean, you could not have come up with a better scenario to sell than you have over the last 6 months. to think that they're going to sell now, it's, there's, like I said, there's a reason we haven't really gone lower. But outside of ApeCoin, which I just mentioned, and maybe Uniswap, because there was some real news on Uniswap with regard to a proposal for the fee switch and the launch of their NFT aggregator program, there really hasn't been a lot of specific project by project or company by company news in the last few weeks. And as a result, we've been stuck just talking about the same thing over and over again, which is the FTX contagion, SBF, and all these crazy interviews and what ultimately happens to DCG. But when I was thinking about that and trying to come up with something to talk about this week, I realized, like, fraud and cheating is everywhere, right? This is not at all specific to digital assets, not even specific to financial markets. I was looking at some of the notes I'd written just over the last 2 months alone. Here's a list of some fraudulent things that have happened. The American Cornhole League were caught teams using non-compliant bags, and ultimately had to impose stricter testing protocols. If you follow chess, the Hans Niemann and Magnus Carlsen saga, the he said she said about whether or not Niemann has been cheating and has probably cheated 100 times. In fishing, recently there was 2 fishermen who faced felony charges for stuffing the fish with weights to increase the poundage of the fish that they were catching. In poker, if you're a poker fan, there was a woman recently accused of cheating, and nobody knows how yet, but certainly an interesting hand to have won based on the cards that she had and what the other had. In Irish dancing, this is a true story. In Irish dancing, 18 dance teachers requested or were offered to fix numerous competitions. The FIFA World Cup, everyone knows. In fact, there's a 4-part Netflix series right now talking about the fraud and deception and some of the scandals with regard to how Qatar finally became the host country. So nobody cares about these things, though, right? These are just one-off stories. The reason everyone cares so much about what's happening with FTX and some of these other areas right now is simply so many people were hurt by it. And as a result, investing really isn't about analyzing markets right now like we usually do. It's about analyzing human behavior. Even here at ARCA, some investors of ours, as well as people not even invested in our funds, have just flooded our inbox with just angry emails, not necessarily directed towards us, just in general about the market. You just don't get that same level of passion with cornhole or fishing or poker because it's just not affecting the same amount of people. And similarly, because this FTX fraud is so big and so rampant, it's giving people who have made mistakes this year a scapegoat, right? Everybody's blaming FTX, even companies like BlockFi that have been, effectively insolvent for well over a year. Everyone's just blaming FTX for their problems, even though a lot of these problems, were structural, long before FTX got involved here. And then you see other pile-on effects, right? Like, everyone's asking, who's next, or who's the next short, or should I short Tether? What should I do? And what's really interesting is nobody's asking what probably is the more obvious question is, what's the best long opportunity right now, right? The market has gotten crushed this year. This is a, generational technology that is being built here. There will, of course, be some winners, and very few are looking at it that way. So, I'm not going to call a bottom, but there's a lot of bottomy signals out there, certainly. I don't know what makes us go higher per se, but it does feel like there's a reason we're not going lower. There's a reason why, this negative sentiment at all-time lows is somewhat supportive for markets. So we'll see. Next week is a big week. You've got CPI, you've got the FOMC meeting. I don't know what the equity market or rates market will do on the heels of that, but I think there's a pretty good chance that this market does, grind sideways for a while, or even potentially grind higher, just given all of the things that we've learned over the last few weeks. So, in terms of finding that path forward, everyone always asks, what would take the market higher right now? In my opinion, there's 2 obvious answers to that, right? The first one is you have to see companies and investors and projects that were unaffected by this coming out with big ideas and big projects, right? For example, we know Starbucks and Polygon, the beta launches this week. Something like that, right? Starbucks, for all intents and purposes, I'm sure, is pretty unaffected by FTX, but they're still plowing ahead with their NFT initiatives through Polygon. We're going to need to see more of that. We're going to need to see more companies, your KKRs, your Apollos, those who just were not invested in this market, who still believe in the use case of the technology, starting to build. And that will likely be what starts the next bull run, is completely new projects and companies that don't currently have tokens today. The second is obviously regulation, right? I mean, there is a whole group of investors and banks and brokers and companies out there that have no exposure to crypto because they couldn't, right? Because there is no regulatory clarity. Once you get some regulatory clarity, even if it's just the low-hanging fruit, like stablecoin regulation, which is easy, those are just unregulated money markets, or you start to see even just mandatory disclosures from exchanges. That's going to open up the floodgates for new companies to come into this space, and I think that has to happen, and it's going to happen sooner than later. So those are the two that I have my eye on, with regard to what could potentially take us higher, is a whole new wave of tokens and projects, as well as, some regulatory clarity, even if it doesn't cover everything. And finally, I thought this was really interesting. I often, for those who follow me on Twitter, at jdorman81. I don't tweet a lot, but I often, will put a couple of ideas and thoughts out there just because I want to see market reaction. Generally, people don't care. Sometimes they do. But I tweeted something last week that was really triggering, and I was surprised by it. What I basically said was, watching this Sam Bankman-Fried media tour that he's doing, it's clear that there's a lot of demand for his time. Every media company is salivating to try to get 10 minutes of his time to try to uncover the gotcha, or ask the tough questions to get all these clicks because people are so interested in what he has to say right now. I said, well, this is actually a perfect example for blockchain. SBF has something valuable that historically would have been hard to quantify, and that's his time. There are people who are demanding that time, the media, who can make money from the clicks. Therefore, that should be monetized. And that's really what blockchain and NFTs specifically have been able to do. So I said, I thought I was being objective, but obviously, it's hard to be objective and I guess unempathetic in this market, given that there is a lot of pain out there. But truthfully, what SBF should do, or someone in his position, they should be tokenizing their time and selling that time through an NFT or another blockchain asset to the highest bidder. Obviously, I'm not suggesting that SBF deserves to make money on this. Hopefully, if something like that happened, it would all go into the FTX estate and go back ultimately to those who have lost money on the FTX exchange. But the idea is, in my opinion, where we're headed, right? These are natural uses cases of blockchain. What does blockchain do? Blockchain gives you the ability to turn anything into an asset and send that, freely and boundaryless across the world. So, independent of whether or not this is a good idea, I don't even know if it is a good idea, because the responses were so heated just because I mentioned that SPF should make money off of this. I don't even know if it was a good idea or not, but I'm intrigued. I would love to hear more people chime in with things like this, ideas on what other natural use cases of blockchain are out there, because I do think that it's inevitable that this technology works at this point. We've just had too many proof points, product market fit, from stable coins to DeFi to NFTs to gaming, that there are going to be more and more opportunities like this. And again, the fact that I mentioned SPF specifically, maybe wrong time, wrong place, but this is a clear case of there's demand and there's an asset that can be monetized. And I think that's what blockchain is going to be most used for going forward. So we'll see. Sorry to those that I angered, but hopefully we do continue to see other creative ideas that maybe are less triggering come out of the wreckage of this market. So that's it for this week. Encourage everyone to read the blog. Got a couple more weeks here in the year. We'll continue to write about the markets even over the holidays. So check in anytime. Appreciate everyone's support this year, and good luck in a tough market. Back next week.